that together, and then you are talking about the very real possibility that there'll be another round of cuts. Maria, back to you.
All right, Charlie, thanks so much. Really a deterioration in that sector, and unfortunate to hear further layoffs to come. Charlie Gasparino. Also making news on Wall Street today is private equity powerhouse KKR's plan to go public. Joining us now with their reaction to KKR's latest move, Fred Lane is chairman and CEO of Lane Berry & Company. Dan Alpert is managing director of Westwood Capital. Gentlemen, good to have you on the program. Welcome.
Thank you.
So let's talk about the structure here and the timing of KKR coming out with this news that they are going to go public. You surprised about the timing, Fred?
No, not really. I think it's actually pretty brilliant on their part. First, I think they're protecting their brand in Europe. The European business KPE has some problems in its portfolio apparently, and I think this is a great time to effectively combine the two entities, protect the brand in Europe because it is a global brand, and basically expand the asset base through raising capital over time. I don't think there's any plan to access the capital markets right away, but I think this is a brilliant move right now because I think it's a way to go public without having the distraction and the challenges at a future point in time, distractions for management. Eventually the stock is going to take off as private equity comes back into favor. It is an institutionalized business. It didn't used to be. It is institutionalized. Having access to permanent capital is a very smart thing for these guys to do.
Daniel, they could have done it a year ago. They decided to wait, and now they're doing it now. What do you make of the structure backing into this offering by merging with the European funds?
Well, I think a year ago, clearly it was going to be a different show. They were going to take money out like the other guys did, and that's obviously not going to happen right now. Earlier this morning, I heard somebody talk about how this might be saying something about the smart money's take on the IPO market. I don't believe that's the case at all. This is a situation where they had an opportunity to kill two birds with one stone, and I think they did it quite well. They had a bunch of very disgruntled investors in KPE. They wanted to make them whole. They actually are going to swap them for their shares, 21% of their worldwide business. That's a great deal. And they're getting behind it. They're doing the stand-up thing. It's very, very impressive. And, of course, they're backdooring into what will eventually be an NYSE listing.
Are you expecting any changes to the way the business operates in terms of, being a buyout firm in an environment where certainly the structure of a deal has changed quite a bit, a lot less leverage here? Do you think their business evolves into something that looks closer to Goldman Sachs or somebody else as we approach this offering? Fred?
Well, I think they're definitely going into the institutional money management business with broader asset classes. They're clearly going to expand their hedge fund capabilities. They're clearly going to capture more of the fees on the financing side. I don't think they aspire to be Goldman Sachs or Merrill Lynch, but I do think it's part of the evolution of the private equity business. Remember, KKR is a leading leverage buyout firm. This is one of the difficult times for leverage buyouts. It's a great time, by the way, for growth equity. Clearly, the investments made in 2008 and 2009 I think people will look back and say this was a great time to invest, as it was in 2003 and 2004 when things were dark.
Even is there any to believe that this stock does well when it does come to market in this slow environment? Would you buy it?
Well, at this point, all I can say is that there will be fortunes made in the coming year. Not necessarily for the next 6 months, which I believe is falling knife environment, but going into 2009, or at least well into 2009, there'll be fortunes made. And what these folks realize, and I think accurately so, is they need a currency to participate in that.
For sure.
And having a big board-listed stock, similar to the way the real estate industry participated through big board-listed stock when REITs went public in the early 90s in the midst of their debacle.
Yep.
They realize that this is the right time to get that in play and get geared up for what will be a phenomenal buying opportunity when things truly bottom out.
It's a great point. Gentlemen, good to have you on the program. Thanks so much.
Thank you.
We'll see you soon. Dylan.
All right, a few minutes left in our first trading day, and it's a loser if you